Welcome to this very special chat. I'm Pavitra and I'm sitting down with Varun Goyal today. He manages both the small cap fund as well as the flexi cap fund. But today we're going to speak primarily about small caps because we like this space and just because of the sheer number of questions that we get on small caps, right?
Sure.
So in this first part, let's just focus on valuations because that seems to be everyone's concern even now. We had that sharp drop that came through for about 4 or 5 months, the market corrected. So from that level also it has now picked up, right? But I think the main concern has been that it never went below historical levels in terms of valuations. Now also, at 19 times it is still expensive. So I don't know if you can time it that precisely, but at some point you have to make the decision to get in. For me, that was about 3-4 months ago. But you tell me, do you have any kind of, rebuttal to people who say that the market is still expensive, especially this pocket?
Yeah, so there is no doubt that there are pockets of froth in the small cap space. So there are some segments, let's say capital markets, some defense, PSU stocks, some engineering capital goods stocks, which are way more expensive than what they have historically been. But if you look at the blended basis, so that's the difference, which is not very material. Yeah. Also, we have to keep in mind what is the earnings growth trajectory. So in my view, looking at the risk return paradigm and the growth which is expected, I believe 19 times is reasonable.
Okay.
If you go back in the past, small cap index has traded on the, let's say, last 5 years, almost at par at the Nifty 50. So yes, are we at a little premium? We are 8 to 10% more premium. But I think looking at the growth, the growth gap is around 10%. And therefore, I believe it is justified.
Yeah. I think, with small caps or with the market overall, what also has happened is that because there was so much negative news flow that came together, right? There are two ways to look at it that, hey, let me not get in when things are so uncertain. Or second, which I think a lot of people don't do, is that, hey, you're getting these prices only because things are uncertain, right? If everything was looking great, you probably wouldn't get it at this price also, which is what happened in the last 3-4 years. What would you say to that?
Okay, so we have to bifurcate the whole thing into two parts. One, there is no doubt there was a cyclical slowdown in India in FY25. Right, so GDP growth slowed down from 7.5% to closer to 6%. In fact, Q2, September quarter last year, our GDP growth came down to 5.4, which is really low. Last year, because of government, busy with elections and all that stuff, we had infra spend also coming down. And third thing is monetary policy was excessively tight, or you can say very tight.
Most of those things seem to be turning.
Yeah, so cyclically, if you see, all the three factors have reversed. The government is spending a lot more in infrastructure this year. We have already seen 50 basis points of rate cut, and we seem to be having a good monsoon. It seems to have arrived before time, and we hope that there will be a good agricultural production, which will be good for rural consumption. So if you were to ask me, macroeconomically, how I look at it, Indian economy is on a cyclical uptick. From 6%, we definitely should see between 6 and 6.5% GDP growth, maybe even higher, depending on the extent of rate cuts we get. So therefore, we believe we will see a rebound of corporate earnings. For FY25, the broader market delivered low single-digit earnings growth. Right? As we all know, markets respond to earnings growth. Last year, it was poor earnings growth and the market responded to that. This year, we believe there is much better earnings growth scenario. Now, on top of that, the second part, which is the variables which are beyond what any one of us can predict. Of course, none of that is under our control, but even predicting them is difficult. One is, of course, the tariffs, the Trump tariffs. They are sometimes on, sometimes off, and sometimes they're 30%, sometimes they're 10%. So we don't know how that will play out. But in our view, India seems to be in a fairly decent position. Very soon, India should have a free trade agreement with US, and hopefully the tariffs can be brought down to 10% or somewhere in the vicinity of that. And that should be doable from Indian economy perspective. The second thing, of course, the unfortunate war, the geopolitical tension that we saw, thankfully it has come to an end. And hopefully if the situation stays this way, I think should be good for the economy. So broadly, I think from a macroeconomic perspective, India looks good for a cyclical recovery for this year. What happens on these two factors, again, very, very difficult to predict. But otherwise, we should see better earnings growth and hopefully followed by better market environment.
No, that makes a lot of sense. Also, like you were mentioning, there are some factors which are just completely out of your control. You have no idea. You cannot predict them.
Yeah.
I would say, of course, the war is one of them, but even something like COVID, even something like a surprise tariff when it comes through, you have no idea. And yes, the small cap companies are more vulnerable, so they may fall more.
Yeah.
But they invariably rise more as well, right? When the recovery does come through. Now, whether that's today or 3 months down the line, you don't know. But these can be looked at as very good entry opportunities. The second thing is that earlier you were mentioning that yes, overall the small cap space might still be a little bit more expensive than historical valuations, but there are pockets where there isn't that much froth, or they are very reasonably priced. What part of the small caps do you think are reasonably valued, and what parts do you think are a little bit overvalued right now?
Yeah, okay. So the small cap 100, small cap 250, there are two indices. Let's look at small cap 250. That's our benchmark.
Yeah.
So that is around 70%, is trading at a 17 PE, which is the average of the last 5 years.
Yeah.
The remaining 30% is what is taking the valuations higher. So what do we have in that 30%? We have around 8 to 9% capital market, which is your exchanges, depositories, AMCs, some of those capital market plays. Because of the higher growth expectation, they're trading at a higher multiple. The second part, which is the most talked about, is the whole capital goods.
Yeah.
So you have that 20% of the benchmark is in engineering, is in power, is in construction, is in defense.
Yeah.
Some of those most loved, chased sectors in the last few years. And that is trading at a much higher PE.
That's taking the whole index.
That's taking the index higher.
Yeah.
So what we have done is, when we launched a small cap fund, we deliberately went underweight on these two sectors.
Yeah.
And therefore, at a portfolio level, we believe our valuations are fairly reasonable and we are able to capture the faster parts of the growing economy.
Yeah.
So I think we have to look at the index. Index is, of course, an aggregation of a lot of various themes and sectors, and we have to make a good balance.
Yeah, no, that's very important to point out, because you have to look at your fund construction, and this is why different funds can also look very different in terms of what their valuations are, right? It does not mean that just because the index is trading at a certain level, all funds are going to reflect that.
Absolutely.
So that's good to point out. I also want your views on something that I've heard so many people say, which is that, right now it is the time to be in large caps.
Yeah.
Do not look at small caps right now. Why would you go to small caps? You don't agree with that you shouldn't look mostly at large caps now?
Okay, so,
I know I don't agree with that, but I'll tell you why later.
Yeah, so I think every market capitalization bucket has its own need.
Yeah.
Right. So we have to look at our own asset allocation in terms of one equity, debt, other precious metals and other stuff. And then within equity, then you have to see what is your risk return appetite, what is your investment horizon, right? So I'll give you some historical numbers. Small cap as an index has been in existence since 2004, small cap 100, small cap 250.
Yeah.
They've completed almost 20 years. As an index, they have delivered somewhere between 16 to 17% IRR.
Yeah.
Right. And,
what other asset class can give you?
So Indian small cap is one rare asset class which can give you high double-digit compounding, and they have done it for last 20 years. Yeah. And we don't think that the next decade should be very different from the previous 2 decades. There is no reason to believe that, right? We believe the Indian growth story should continue.
Yeah.
And therefore, we believe every investor who's looking for long-term wealth creation should have some allocation to small caps.
Yeah.
How much, of course, your wealth advisor or you have to look at on risk return appetite. So if you have a 5-year view, 10-year, 15-year view, you're saving for your children, saving for their education or marriage, if you're looking to upgrade your house, if you're looking to save for your retirement, I think it's a must-have asset class. Of course, percentage you have to check and decide based on your risk return appetite. And therefore, there is a place for small cap. There is a place for large cap, of course, too, because that's an asset class which is more stable and has been more steady.
Yeah.
Small cap will be more volatile, but also comes with a higher potential risk, potential return.
I was hosting a session yesterday where someone asked me, isn't there a fund that can give you high returns with low risk? And I said, unfortunately, that just does not exist. So, while the risk might be slightly higher, of course, the returns have absolutely, been in keeping with that and have been very encouraging as well. Just one more question on the earnings. I know we spoke about it briefly before, but now this earnings season is almost out. Tell me, within the small cap space, what has really stood out to you in terms of a hit or a miss?
Yeah.
Sectorally.
So I think if you look at this earnings season, the Q4 earnings have been fairly decent.
Yeah.
I know earnings have been more or less in line with expectation. We went into the season with a very moderate expectation, knowing that this was a year of slowdown in economic growth. And as we are coming out of it, I think what's more important than these numbers is what is the commentary being given for the next few quarters.
Yeah.
And what we see is there are early signs of some kind of recovery in rural and urban consumption.
Yeah.
There's a lot of rate cut, which is 50 basis points, and everyone is talking about at least 25 and maybe a little bit more.
Yeah.
So if that happens, that will really boost. Your home loan rates will come down, your auto loans will come down, personal loan rates will come down. So that will definitely boost consumption.
Yeah.
So I think if the way I look at it is Q4 is that we are seeing early signs of recovery. And also let me mention two very important things. One, small cap companies particularly benefit whenever there are commodity price corrections. So in the last 6 months to 1 year, you have all the food commodity basket, wheat flour, palm oil, your packaging material costs.
See, the inflation number itself came down so much.
And we are looking at a almost 2-year low as far as inflation numbers are concerned. So inflation coming down disproportionately benefits the small cap. Because why? Because their pricing power is limited in most cases. Second, interest rate coming down, your borrowing cost coming down also has a bigger benefit for small cap as compared to the large cap because they are borrowing at a higher rate. So both the things will definitely help the bottom lines of small cap companies going forward. So our sense is, one, demand coming back, hopefully top lines can grow faster. Second, commodity prices come down, so maybe the margins can be better. And third is your borrowing cost also coming down. In totality, that should lead to a fairly healthy profit growth for small cap companies.
Okay, so do you have some kind of estimate on the timeline on when do you see this full recovery kind of playing out?
Yeah. So our sense is, the measures that the RBI did typically takes 6 months for the rate cuts to start trickling in, right? And second, the tax cuts. Government did almost 1 lakh crores of tax cuts. So give it a few months, few quarters. I think around the festive time, that will be really the litmus test. And our sense is this year we should have a good festive season.
But you don't think this is priced in?
So, in some cases it may be priced in, but in some cases, I think markets may be surprised by the strength of the earnings growth. In fact, in some of the names, even in this quarter, while the expectation was fairly muted, and that is why you've seen very disproportionate reaction. In the last week or 10 days, some of the results have come in, whether they're engineering companies, whether they are real estate companies, there has been very disproportionate reactions to results because the results have been slightly better than what markets were expecting.
And anything better than expectations is always rewarded.
Gets priced in very quickly these days. Yes. Yeah.
Okay, very interesting. We're going to wrap this one up here, but you have to stay with me because I'm going to ask you about our specific fund and also how you like to invest and how exposed are you to the small cap space. All right, now that we have spoken all about valuations, on the other side, we are going to shift focus and talk all about how the Mirae Asset Small Cap Fund is constructed, the specific spots that we like within the market right now, and also pockets that we think might be overvalued. Stay tuned.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.